Okay, everybody, it's a Thursday. Let's get to it. How are we doing today? Big shout out to everybody in the chat. Not going to waste too much time on what's happening, but it's pretty clear that acceleration is in full swing. Call it harmonic acceleration. Call it whatever you want. Just don't call me long. Let's talk about Ethereum, folks, because that really does seem to be the market that is leading crypto down. And I tweeted this last night, just to refresh. These are also available in the Discord. Let's take care of business. I think we got this fixed. Miss Stephanie says we have replaced the single login with a double login on basic registration. Hopefully that kills the Russian bots. So if you have any problems, Stephanie's going to post the Discord link. Thank you, Snipes. Thank you. What's up, Snipes? Cody, appreciate you. Thank you. Absolutely. We're here Monday, Tuesday, and Thursday doing the lunch hour. Doing a little lunch hour by request, I guess. If you're a gold or silver membership, we know who you are. Feel free to ask questions. And yes, the bat from last night. This was before after, and I love doing those. Before after, folks, looks like this. Type 1 all the way. And when we get patterns like this, after a 50% drop in the last week, and then you get a dead cat bounce, not even, and now back down. The problem is we're type 2 already. Sorry, we're target 2 already. And that looks like this. Come on back. Here's your after chart. That's a 10% move right there in the last 10 hours. 10% in 10 hours? Not bad. I forget who sent me the KuCoin link. Someone, maybe it was Snipe. Someone sent me on Discord a KuCoin link actually to short crypto, which I probably should have done that a while ago. But I don't know about these brokerages anymore. I mentioned this last week. I took most of my money off of Coinbase because of all of the potential issues. I still have an account at Binance, just to be straight up. And let's take care of other business. So as I say make these financial comments that you all know, this is entertainment, not financial advice that I hope you find educational. Here's your risk disclaimer. So absolutely. What's up, James Hetfield? No Metallica tour this summer? Are you going to trade all summer instead of playing stadiums? Let me know. I'd love to go to a Metallica show. It's probably one of the only bands I haven't seen live. Anyway, let's get to it. What are you going to do? Good old markets. Markets are down. S&P down 100. NASDAQ down 465. Dow down 760. These were all probably, about another 50, 100 lower across the board. Dow was down 850 at the low. NASDAQ was down 500. And now, what are we going to do today? In terms of crypto, folks, and let's just start with that. Is it sooner or later that this will happen? Is it sooner or later that we get to the weekly targets? Because we're failing across the board here, and we know that. We're failing any daily possibility. Let's just dial it back. Here is a bat move. And let me do this just for everybody. Okay, so little basic 1, 2, 3 here, but I think this might be helpful, especially for a lot of the new people. What are we looking for? We're looking for M and W formations Based on those alignments, they dictate where our projected completion occurs. So for Ethereum, we take the extreme high to low to cycle high. Where's your B point? Off of that is at a 55%. That is a touch lower than our 618 tolerance for a Gartley. You know, the 55 is about the maximum we would want to see for a bat pattern. So we mix that up, do our C point at a 50. We also need a minimum ABCD component where your A to B leg and C to D are at least equivalent. All of that still puts us down at 600. I was saying 680 earlier, but take a look at the ABCD dynamics. Let's use the TradingView tool. Big shout out to TradingView. Those guys are great. Really, the TradingView crew, you want to talk about guys that are committed to their product. TradingView is just nonstop. Those guys are great. But there's your ABCD component, and your ABCD measure puts you kind of like this. Kind of like around 700. So we're at 1100 now. Price action, you know, this is the second half of the leg, actually. So, you know, there are some people, I saw Pompliano finally say crypto winner. Welcome. But, you know, we're close to, in terms of time, this could happen quicker than even I thought. I thought maybe this fall, September, October, you come down to that 600 level. I just think that if Ethereum fails here, they fail the $1,000 level, which was just a psychological bounce. There is nothing until that 600 handle. Handle being just a fancy trader term for your round digit. And the BAM looks like this. You went from roughly your 50 down to your 886 and you shoot the gap. And it's usually an accelerated move. That's how these things play out. We talked a little bit about that on Tuesday. So what are we going to do? You know, again, I'm thinking you got to let it drop. I'm thinking if you get more continuation patterns like this, if you are able to short crypto, depending on your brokerage, maybe wait ideally for a type 2. Maybe this could hold. We're at target 2. We have our first harmonic strength index signal on the 1 hour. Looks like that. Will we even get the type 2 return? Can we come back to 1235, 12, maybe as high as the hop at 1300 and then go down? Or is it just a total loss, total capitulation, which we'll know. I said that in my tweet, the follow-up tweet tonight, that if we fail this, it's probably now. There's really nothing left. Yeah, Snipes, I agree. 600, 700 is your minimum ABCD. There's metrics there. We have historic precedent. And I just don't understand why anyone would try to be involved putting fresh money into a trend and just everything that's happening now. Worst macro ever. The other part of this is that fundamentally this is the worst macro environment. It's worse than 2000. It's statistically worse than the 70s, and we haven't even dropped yet, and that's on the major markets. For crypto, the current environment, and especially with a surging dollar, because look, we're looking at Ethereum versus US dollar. I'll get into the dollar index today, but crypto has never seen an environment like this. It's never seen rates like this Hey, maybe, wait, let me take that back. Okay, you did see some rates in 2010, 2013, but the trend was lower rates, slashing them. Now, quickly rising, fastly, rapidly accelerating rates, and there is nothing here. The other point, I'll get to it in Bitcoin in a minute, is you're going to have a real hoedown here on proof of stake versus proof of work. These proof of work models, I'd have to think they are going to face pure just economic realities. That as utility rates go up and the cost of running all of that, miners go, it just continues to increase. And here's Bitcoin. Okay, Bitcoin actually did not generate a bat pattern because the alignment was not the same. You could trace it out, but again, here's where the algos come into play to kind of really favor the better of the two opportunities. This is actually more, you go there with your bat. Did it get to the 886? Yeah, oh my gosh. I mean, almost an exact 886 on Bitcoin off that last ditch down. We do have a butterfly pattern. I mentioned the 19,780 level. I think that has to get hit, and it probably gets hit today or tomorrow, where we do crack under 20,000 and then all hell breaks loose. The other thing with the software, and really quick, folks that have been having issue logging into basic members, listen, you have to get with the TradingView program. The easiest way to do that is send your username for TradingView to hpc@sr-analyst.com, please. Thanks, Snipes. Snipes, you are reading my mind. Yes. I guess it matters. If you guys hit the like button for me, subscribe to get the notifications. That's going to really help you out to know when I go on. We're here around 12 noon, 3 days a week. So that's the place to get. And then go here, Harmonic Trading. Harmonic Trading. There you go. That's me. But what my real thought, macro thought on Bitcoin is, what is the price point where cost of mining intersects with the Bitcoin price? And then at what point does that lower Bitcoin price and higher cost basically cancel each other out and you're mining at a loss? We're going to see this summer a lot of ominous things in development for the summer, which is based on what's already happening, there's nothing really to hang your hat on. So from that larger perspective, I don't even want to say it. I don't want to say it. It's too crude. It's just you're running uphill, wind in your face, without really much hope of getting help here on the downside. You have to bounce right here. Bitcoin on this hourly HSI, that's at 20,900. But I still say, even for the hourly time frame, okay, you got to come back. Maybe hit a hop level down here at 19.7. So I definitely want to just stick with that. The only thing that seems to be happening now is that this is taking shape faster. We do have this. Check out this. So we have a potential crab that's getting generated. That's the blue line. Let me fix it. There you go. And it's amazing that we talked about the NASDAQ doing a 1618 from October high to the December, October low to the November, December peak. Now this is across the board in all the markets, where all of the markets, maybe Dow, not yet quite Dow, but it'll get there. All of your tech is at a 1618 or lower, off of that run to the peak. And this, by definition, is where we want to look for the exact point. What's going to happen here? 19,718 is that number. And if you fail that number and you close under that number, then it's a straight line down. I would love to see the market try to bounce from like 19.7, maybe not much more than a few thousand points, but something. Otherwise, this is going to crash. Otherwise, you have nothing underneath here. And when you fail harmonic patterns, okay, we've seen the severity of the trend increase in so many of these until where you get another major pattern, or I'm more inclined of thinking, as I've said before, we need to see the software generate a big bat pattern like it did in 2019 and then 2020 again, and that would be a 11, 10,000 general area. Let's go to total crypto market cap, because total crypto market cap is looking even worse. This is where the bleed out, I think, starts to happen. And I've been saying this, that anything under 1.09 is devastation. Well, look what happened. 1.09, folks. Ever since then, it's falling off a cliff. There's 109. You're now 88 billion. Sorry, 880 billion, 882 billion to be exact. You were as low as 850 billion. I will still say minimum crypto total market cap index will have to do a BAM of its own, bat action magnet move down to $440 billion. And you want to see it happen, I think, more quickly. I would want to see capitulation. You almost don't want this to rally. You really want this thing to actually do the final washout. And we've been talking about it for quite some time. This harbinger of price action of 4, 5, 6, 7, 8. Call that down for 9, 10, 11 down weeks. That, even though that's a doji, it's still down. This is all down, 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 down. 11 weeks down is just remarkable. And this too would need a minimum ABCD right off the top. So there's your A to B leg right there. Come back to C, which is at a quite a shallow 43%. And then would have to take you down to somewhere about 700 billion. That's that minimum ABCD. I think for myself, so just to share with what, let you guys know what I've done. So I probably have moved out 97% of my money out of crypto, off crypto brokerages, back to my bank account. I got quite nervous when I saw, even Coinbase, not even 48 hours or 72 hours after I moved it, they changed their policy until you don't get your money for 2 weeks. That's unheard of. And I just think that these are signs, larger signs of where you are. To finish it, you need some kind of major move, and then you need to do the stabilization, capitulation, stabilization. Capitulation like, 2020, but that was already after stabilizing for the better part of a year and a half from the 2018 decline. But something like this big down move where, you lost 50% in 4 weeks. So if we could go from 885 billion down to 450 billion inside the next 4 to 6 weeks and stabilize, okay. That would be capitulation. Then maybe I'll take the remaining 3% that I have and start playing back into crypto. But on Binance, I think Coinbase is in trouble because they're a publicly traded company. There's a lot of things they have to do versus a Binance or a private entity. Yeah, James is saying that the Celsius, the freezing of accounts, I mean, it's just another story. It will be a story you will tell your grandkids, quite frankly. And for most of you, this is your first official bear market. I mean, this is a brutal bear market. This is a bear market where, yeah, you could lose 85, 90% off the top. Go to from 3 trillion to 400 billion. Ouch. But that's definitely taking shape. And I don't even think it'll be October. I thought it would be this summer, and we're still, 5 days away from the start of summer. But there's your BAM at the 50, back down to the 886. I would check that. Neuro saying he didn't see that Coinbase took 2 weeks to withdraw. I think it was a new announcement about 2 days ago. I don't know. I haven't even looked. I just I do I think there's two takes on this. I think there's the diehard crypto hodlers that will, for whatever reason, they're and I saw some people comment, Bitcoin's either, or well, Sailor said it too. Bitcoin's either going to zero or a million. Well, tell me how that drawdown's going to feel in about another month. Sailor will likely, he'll get a call. He will definitely get a call to where he'll have to deal with, he'll have to deal with at least coming up with money to cover the margin call. And margin calls are the final phase of every market decline. Once you start hearing that, that's when we're getting close. You should hear you're going to hear not only these people. I look at something like Celsius as a margin call. So, and not to mention Do Kwon over at Luna, that's a margin call. He called it in and he took your money. Sorry. Really tough. I mean, I don't mean to laugh because it's a horrible thing that happened. Again, I think that guy should be in jail. That's a whole other story. I want to be thinking opportunity here. However, we are in one of those rare times where if you're not short already, it's going to be tough to enter a new short. And if you're long, you're going to have to write it down to these minimum targets. It is absolutely a really difficult time. It's like a hurricane blowing through. I agree with that analogy, and you have to wait till it passes. I'm looking for opportunities, but I go to things like, okay, here's Solana. Okay, massive bat pattern, folks. A couple of different things here. The software is kicking out, which is a great start. That's a great start, but I need to see one bullish candle before I would even consider it. These are some of the rules that we employ to determine the optimal entry against a pattern zone. Solana on a daily, weekly, it's just scraping. And on the weekly, you saw what it has. Daily, it's a bat pattern, just bleeding out. And there's no confirmation here. Zero. Cardano was one that unexpectedly took a rather sharp bounce and then rolled right back over. On the weekly for Cardano, we're still, 886 is still down there at about 37 cents. So Cardano has, these all have to hit minimum numbers. I think what people do learn eventually is that when you set up your measurements and you have your patterns and you're properly identified, well, when you're in the 4 out of the 5 points, you're in the 4 of the 5 legs, that fifth leg, it's automatic. I mean, that's why we call it BAM, bad action magnet move. It's like a magnet, and it'll go down there and, and have to wash out. Algo, I think this was on a daily. Algo on a daily. Yeah, and again, Algo is a good example of a busted pattern where if you see a pattern, you're running your software scans, and you've got these major patterns. Well, look what happens at the initial completion point of the bat. That's your 886. Okay, you did have confirmation, everything you'd want to see. You get a minimum reaction, and then you roll over, go sideways. By the time you're 30 bars and you're doing nothing, you're done. So now we're below the hop, 31 and change. Your hop is at 36 on Algo. We did just register a bullish confirmation, but I would still want to wait a couple of days before even assuming a trade. Again, when you're this devastated, folks, it's tough to even take a long trade because if anything, maybe shorts. We were looking at a couple of bearish patterns when we rolled out of here on Tuesday. So this is, just understand where you are, please. Understand where you are within this whole framework, not only for crypto, the markets in general, but your highest of flyers. Here's Alice. Remember Decentraland and the metaverse is going to be the next thing, and you better buy real estate and all that. Okay, we've got a nice 4-hour bat pattern on Alice. Go to your daily time frame. Okay, look at that deep crab. There's a whole bunch of things going on here. But check out the action. There's terminal bar. Where are we? We're day 31 post terminal bar. We got the confirmation 30 days after the fact. So, all right. For Alice, that puts you somewhere around $1.93 for the check back confirmation. Hop levels 172, and that's where I would look if I knew something about this, which I don't. Which if I was a fan of the metaverse and I thought that was the future, which I don't, because I just don't. Right now, you need the long-term solution to situations like these that people will realize at the end of it is that your company, your investment vehicle, whatever it is, it better make something. It better sell a product or an irreplaceable service. And even then, those services can come and go. But what we're looking at here with the digital metaverse, whatever, these valuations just fluctuate based on whoever is the last person that bought at whatever price. And we can see it in the price action. We can see it in the collective data here that we are deeply oversold with this kind of 1618 deep crab down at the hop, trying to bottom, but bring in some standard technical analysis. Simple trend line until you're to the right of that trend line. Anything that you're going to get is probably just a reaction. And until that happens, until we are is swimming under the trend line, whether it's the markets or whether it's crypto, you're going to have to just be aware that if you try to enter, you're catching a falling knife, and you are still probably 30 sessions away from breaking that trend line and showing anything. So your fear here is simply not to lose any more money and let it come to you. I mean, I let's say if it reversed tomorrow, I would still say your confirmation came in 30 bars, almost too late, but maybe a type 1 is how we would look at that, and we would still need to see a type 2 to the right of that downtrend before a larger reversal would take shape. It just is it's a tough spot for all of this to be in, but that's where you are. And you are, 3/4 of the way down. Let's take a look at, say, Doge. Again, talk about making nothing. It really, this will go down in the history books. This will go down as, one of the greatest kind of parabolic moves ever. And then one of the greatest parabolic corrections ever that I just think comes back to your static support. I don't, why would this do anything but basically come back to a penny or 2 cents? Back to where it really got started, which was, is about a half a cent or a cent. And I'm not, I know a lot of people are sitting on this. Not anyone in here, but I know a lot of people are sitting on this that, that wrote it up. Some got out, some made money, a lot didn't, and a lot are just kind of still hoping and holding. There's a whole bunch of these. I mean, Polkadot. These are your flashy names from the last year, but Polkadot's another one. And again, check it out. We're all the way back. We did this amazing type 1 all the way up off of this shark. Now we're back at the hop at 558. You're bouncing. You have HSI there. Okay. 2 days ago, we triggered the HSI. Yesterday, we checked back. No follow through. Can this hold? It could hold for a little while. But again, if you just draw it off the top, this is your proposition. I was jokingly saying that, today's session is called Harmonic Pattern Safe Space. Well, this is not your safe space. When you're under the trend line, it's not your safe space. When you don't have any kind of real clear pattern, anything, your safe space is over here. And hey, if that went from 6 to 16, I'm still going to think reaction, because to the right of that trend line, I want to see something over here. I want to see my signal, stabilize for a while and then give me a pattern or something to the right of that downtrend, much like we saw in Bitcoin and Ethereum total crypto market cap back in 2017. Go to the weekly. The HOP stands for Harmonic Optimal Price. I'll get into that in a second. HOP is that layered technique that we use. It's that maximum overspill move. Works better in stuff like the crab, things like that. But again, we have to absolutely just respect connecting dots. When we connect dots for something like Bitcoin and you go back to 2019, there's got to be a better, where's Coinbase or TradingView? TradingView is a good one. And let's just remove this. There's nothing, you have to come back and retest it like you did 2019. And this would be the kind of the mantra for the next 2 years. No matter where your bottom is, even if you were a big believer that Bitcoin was going to do a 20,000, they were going to come in and all the billionaires were going to pool their money at 20K, this is still the general theory of how we look at any price action. I mean, look, this concept, first test support, secondary retest confirmation, is the standard assessment for type 1, type 2 behavior. You want to see a reaction and you want to see a retest. But I want to see a big pattern first. Your bat pattern from 17 all the way back here, that had everything you wanted to see. And again, this is where you wait for the market to come to you. That's probably the thing everyone needs to tell themselves, that unless you have clear cut harmonic patterns, confirmation, ingredients that define a long opportunity for you, you're doing nothing. You're doing nothing. I would want to see this thing come down, trigger HSI, and still expect reaction over the next year, return in that 12-month, 18-month period before another cycle would even start. You're so far away. Final point about crypto that we should all take to heart is the current situation of both HSI and amplified. You need to see this thing pivot out, and look what it's doing. This was kind of like the other day when I mentioned the NASDAQ chart and said, okay, what's it doing? Tell yourself. Ask yourself, what's happening at these levels? Indicator expansion, harmonic strength index expansion in the oversold. That means more time oversold. More time that it would need in terms of coming down before this can stabilize. And then you wouldn't even, the light switch does not even go on until that comes out of the zone. On a weekly chart, you're talking, let's go to Sunday. And again, depending on if it's a Friday close or Sunday close, but this weekend where we are now is going to, if it's going to continue now, it will fall apart into tomorrow, which I think it will. I think we're going to see ugly close today, ugly close tomorrow, ugly close Monday. Not to mention, okay, so think about this too. I'm not an astrology guy at all, but something that we did notice. Oh, you got to be kidding me. Hold on one second, folks. Hold on one second. I almost cut my cord. We're looking at another summer solstice June 21 potential low. Remember last year when Bitcoin was coming down? And I mentioned that of right back here. Here's June 21st, right? Where's June 21? Right there. There's June 21. And we were noticing this as we went along, winter solstice, spring solstice, the 21st, whatever. For whatever reason, I don't even want to get into it beyond that, other than it has formed cyclical lows or cyclical inflection points at the spring, summer, fall, winter solstice, whatever. I just think of it in terms of dates. That with this current action, and June 21st being right around the corner, I would not be surprised to see this come down another 5 days down. And then we look for something next week, next Tuesday, next Wednesday for some kind of low, something, because 11 weeks down in a row is about as bad as any market can get without a complete total collapse. Just trying to put the numbers together with some minimum dates. And again, this is all happening a lot quicker than I thought. I thought at a minimum we could get at least through the summer or get some kind of counter trend rally before the summer. It's just not happening. It's not easy. This is, for me, about as bad as it could be. So it just has to reach those targets, price levels. Let's jump over to the markets quickly. Let's see what's going on there, because the Dow, NASDAQ falling apart. Dow's down 668. There's your diamonds. Let's pull up NASDAQ NQ. NASDAQ was down almost 500. There's a 5-minute chart. Let me just blow this up. Nothing there currently. But if we go to the daily chart, folks, this is the one that I've been following all along and for a long time, really since violating 13,000. We were looking for 11,848, but after the nothing reaction and now falling below here, there's your deep crab look of 7-day bounce. And we mentioned this too. It's tough to see, but that pink dot, that's harmonic strength index. So we got a bearish reading inside of a bullish zone. Always going to take more time. When you see that development and you see that trigger, that is absolutely a warning sign. Warning sign for fresh longs to scratch, or if you're looking for a continuation, that's where it usually occurs. There you go. And again, like Bitcoin, we're oversold, but we're refusing to come out of the zone. You're looking like this in there. So if we continue to roll back down and HSI decides to stay in here for a few more days like this, you're going to get into a serious slide where then we go down another 1618 and we just become a pattern of these 1618 extensions stair stepping our way all the way just much lower like this. You know, we hit a target. We have a brief bounce, brief 3-5 day bounce. There's another hop level, 3-5 day bounce straight down. There's like 7-8, but then back down again. Beyond this pattern, which we're already there, you have to default to the larger time frame, which is a weekly time frame. And again, we run the spread of ratios going from COVID low. Oop, get back here. COVID low to recent all-time peak. Yeah, you've got. I mentioned this on Tuesday as well. These continued little bounces off of each harmonic level. 382, little nominal 50 bounce. Now we go to the 618 at 10,500. That's probably real soon. And again, that's only 600 points away. But I could see that happening by next week, by Tuesday, Wednesday next week. We get to this 10.5 level and then see what happens. Can you get something off of these levels? Because we really are collapsing. I don't want to be over dramatic, but this price action is not just a severe correction like the COVID dump. You know, look at what the COVID dump did. There's COVID. COVID was 4 whole weeks down. You had an up week in between, and you had some stabilization. This is from that top in March to where we currently are. You're talking 11 bars down out of 12 weeks. That's why I say the acceleration is happening. That's why it's a difficult condition to be in when you're in a downside continuation like we are. Maybe the bounce after yesterday's Fed announcement, which was ridiculous to say the least, is the continued thing to look for. What was it? It was a 30-minute or an hour? Yeah, it was a bat pattern. Look at that bat pattern. Much like Bitcoin, much like Ethereum, we had a hard move down. Okay, long extended move down. Like this. And then you bounce off the low and you form another W consolidation, bearish consolidation pattern that still did your type 1, type 2. This is the other beautiful thing about understanding harmonic pattern framework. Even if you're looking to jump on any kind of a opportunity, you still get your 1, 2 kaplam. And I would want to see a bullish pattern on a 30-minute or 5-minute or something that would then clue me into at least intraday there's something there. But until then, nothing. I really can't stress how severe this is. It hasn't been this severe since 2008 for sure. We've already lost more money than in total market cap than 2008. And then do we get the drag? Do we get the 1-2 year washout that has to occur after this has happened? So all of that, take that for what it is, just of understanding this is abnormally severe. And yes, we're oversold, but it's not an opportunity yet. Really quick, let's go over to crude oil. That's coming off now. This is a little bit different. A few bullish patterns down around 110. I'm thinking a little bit more than this. And I would still say that crude oil could give us a nice opportunity, but it's going to have to pull back. We had a couple patterns here. The butterfly trying to flash a crab around on the retest of 125. I would look at it like this. Crude oil and the stocks are getting clobbered, but let them come down, and then we'll come into maybe Monday or Tuesday. Let's see what happens here if we can get crude oil to come back and do a return move. I think any sell reaction in the energy market is just that, a reaction. Tech, it's a different story. Okay, the sell is a continuation. I'll go to gold. Yeah, I haven't looked at gold in a while, but gold just holding its head. There's daily. Should be a bat pattern. Yeah, there's a bat pattern here. I knew it. Bat pattern at 1790. So wait on that. If you're looking for a long opportunity, gold might be the place to consider, but always at what price? Because this did not reach a full type 1. That the bat reaction so far just checked back. Look, there's HSI at around 1800, ton of support. 1790 is your 886. So these should be your maximum. And the fact that this is still a type 1 in gold means that your maximum target for this move is 1900, and then come back down. Why? Because that's where that secondary test of patterns is where you're going to get the bigger potential moves, to where it would just continue the zigzag up to 1966. If you want to hide out in gold, it's probably not a bad place to go, especially after doing such a nice correction. I would just be quite careful. I don't pile into gold because I don't think that's even a safe haven during these times. I mean, really, if you want to know where everyone's going, it's this place. It's dollar index, which is remarkable because of everything that was said about the dollar a year ago, and it was total trash, when in fact, you're forming beautiful bullish pattern down at 90. Came back, type 1, type 2, explosion. And you have to go to the monthly for dollar index to really see where this is going. Remember this? Dollar index, hop level up at 106, and it's a beautiful crab pattern. Type 1, down to target 1 at 91. Now this one came back twice. There's your first attempt. Came back down with another HSI. So I would want to see HSI trigger up here, maybe as high as 106. You're still deeply overbought. Needs more time. Maybe go to the monthly or weekly to get some clarity here. Here's weekly. Yeah, weekly has pattern's not as great, but you do have an HSI signal. And I could see a pause. Not much more than that, but a pause or a pullback, at least to alleviate some of the pressure, and you come back to the trend line. Again, this is a perfect example. Check out the downtrend from that prior peak. You want to be to the right of these downtrends or to the left of the uptrend. Sorry, to the right of the downtrend for anything bullish, to the right of the downtrend if you're bearish. I would rather see my bearish pattern under that trend line. So this is still in a reaction mode, but it explains a lot. And you go to the historic norms, historic ranges, you actually see, well, hey, yeah, we have this long, decade-long crab pattern. Around 106 is a big number. But until then, you don't expect anything to change. If dollar's going to continue surging, that means everything else is going to stay the same. It's like I said, tough place to be. Unless you're in cash and you're going to want to take a trip abroad. Look at one or two ideas. So here's something. Let me go over to the other. Let's go to Harmonic Trader. Harmonic Pattern Collection on TradingView. So Hershey's is one that I mentioned a while ago. Where'd it go? Let me pop that up. And this is a weekly pattern that just starting to roll over. Look at that. I mentioned this a while ago. We had, where's our amplified? Yeah, our HSI, our amplified, all of those registered recently. I think Hershey's still in a type 1 move. You're above 200. Target 1 is 167. So one of the thoughts that I have is look for this. Look for a long-term put, 90-day put, something like this. You're currently bouncing off of this crab pattern, which should be a nominal reaction. It's just looking ugly and rolling over. And I bring your attention to something that we did mention a while back, which has completely collapsed, which is Altria Group. And really happy now. I held on to about 10% of my original position throughout all of this because I bought it all the way down here. Well, I should have sold it all. I mean, I got off a lot. I had a huge position in this, but then cleared it out at 56 and change, 56.50. And you fell apart on this. I think you folks do remember. Go back to April, early May, what I was saying on this. And now, okay, looks like Altria wants to come back to 43 on that Gartley. That's what I think Hershey's is going to do. Everyone's running to Hershey's like it's a defensive stock. I just think it's going to get caught up, and you're going to enter acceleration phase much like Altria did. A real shame. Real shame. One or two more. Let's look at P&G. Because these are the areas where people are trying to hang out. Here's Proctor Gamble. Another one, total collapse. It's got another crab pattern, but it's still a ways. It's still days away from registering, giving you a signal. Look at your HSI, deeply oversold. Still has to come out of the zone. So this is the beauty of the software with HSI, Harmonic Strength Index alone, that all you need to do is be patient until it pops out and you get a pink arrow. Until that happens, you are an observer. Do nothing. Yes, it's a great, deeply oversold with a massive pattern that just is not ready to go yet. So you have to wait. Yeah, we have to be patient. The other one, which is Pfizer, on principle, I want to sell this thing to the moon or into the hole. Pfizer has reversed. Pfizer, I think, goes to target 2 at 37. A tough one. It's kind of a tough read because you had almost a perfect type 1. Didn't quite hit. Come back for the retest. Okay, your main number is 53. Now trading 47.60, but 37.61. All of these are doing it. They're your defensive names. There's no defense there. Here's Coca-Cola, and Coca-Cola on the daily. Where is it? Where's Coca-Cola? Is it daily or monthly? Hold on, weekly. My fault. What I thought I had something in Coke up here at around 65. Regardless, we have a bat pattern right off the top at 59 on Coke. At best, you look at something like this: type 1 reaction, and then come back down for the 2. Not what you want to see. I mean, it is at least there's something there, and it's holding. Coke is trying to hold 58. Anything under 58, or certainly under this hop level, for 57.39, that's where these start to break away, and that's the last thing for this market. Let me go over to the harmonic pattern collection for e-signal. The 2 stocks you want to watch: Apple, of course, 4-hour time frame. Is this going to break away off this? There's Apple deep crab pattern. Okay, but the hop level is 119. We just entered into this 3 days ago, and it's lackluster action. You hit the 1618 at 131, and then red candle, red candle, red candle. Okay, a green candle, first one, but zero follow through. Quite weak. Probably go down to hop level at 119. And until it does, and until it gives me confirmation, there's really not a heck of a lot there. Why is that doing that? Hold on. Yeah, even on the hourly. There's a question that some of the HSI are fast, meaning they don't check back. I agree with that. I think it's about the next bar, and it's also about, do you have other confirmation? Excuse me. Do you have this kind of thing? There's amplified coming out. That lines up with HSI. Even though there was not much of a reaction, if you're looking here, at least you got double confirmation, which helps, but no follow through. Again, once you have that, once you have confirmation, once you're below your zones, you're running out of time. And if it checks back and then just doesn't go within 5, 7, 10 bars, or demonstrate clear progress, you're out. That's a really important part of the harmonic pattern skill set. If you're here at a completion of a pattern, and let's say you enter on a green bar, and then you go sideways, sideways, green, down, you're going to take more time. And so that's why the aggressiveness is so critical on those type 1 tests. For Apple, there's really nothing here on intraday. You're trying to form some patterns, like on the 4-hour here. You do have this deep crab, but no confirmation. And you see what happens when you don't have confirmation. I don't know why that's doing that to me. Keep an eye on that one. I really look at Tilray. I really don't. Because they destroyed that industry too. But I'll pop it up for you. Tilray looks like that on your daily, or actually weekly, and it's nothing. Did nothing. You had the big run in 2018. That was it. Yeah, even that bad. I mean, That was this year. That was the MAME stock thing, taking it to 62. That's abnormal. That's where SEC should have come in on these things. I mean, the regulation and all of the response to what happened back then should have already taken place, but they decided to just completely let this whole industry burn, which they're trying to do with oil. It's tough. It's really not a great environment. If you're a believer in the markets, which I am, but there's a time and place for everything. This still needs a lot of time. Here's ARK Investments, our best friend Kathy Wood. It was up yesterday for a little while, now back down. This might be a poster child for how to be looking at all bat patterns, weekly bat patterns, that as long as the hop isn't negative, that's probably where you go. No confirmation here. Let me get to the daily. I don't know why that's doing that. There's your daily. No confirmation yet. We really need to see this come into the zone, pop out at a real nice harmonic pattern. It's not there. I mean, look, we failed. You failed the hop on the deep crab at 60, and you ended up losing half your money after violating the hop. That's not what should happen. Again, if you're at the hop level and you have confirmation, you can tighten up your stops just underneath that hop level. There shouldn't be much overspill, especially after you hit the hop one time. Take a look. Take a look at the bearish that preceded all of this. You know, straight on through, up to the hop. Once it hit the hop, it rolled over. And there was nothing there. Seems to me that's what's going on. It just is not. You're not there yet. You're not down where you need to be, and you're not there in a way that needs to happen. Let me see if I can get the VIX, because the VIX index isn't really moving. Here's the VIX, folks. There's your perspective. With everything as bad as it is, you would think this would be a lot worse, but it's not. There's your support resistance right there. Every time it gets above 33, okay, it's a sell. Is that going to happen this time? Because we're well above 33. Got to see. You break out of here, there's nothing. I mean, I wouldn't. I really would prefer to see something like a spike and then come back down. But we've got bigger problems than just like a one-off market event that would be anything else other than, short term. Short term. I mean, volatility, you go back to 2020, was registering 80 for a few days. And then let's just look at all-time range. Yep. So by far, you've got 16 to 18. Big harmonic support. 33 to 35, seemingly to be resistance to any all harmonic pattern creature that develops. It's like that versus, say, something like this. I'll even take this out. You're there. Okay? If this inflation is going to be temporary, this has to roll over. If it doesn't, and market conditions are going to get worse, as soon as the VIX runs to 40, runs to 39, forget about it. We go up and do another retest like we did in the prior cycles, basically that prior high, 85. And we saw that, 2016, 2012. You see the pattern there? That would also help to define the market low. You need to get a big volatility rush. You need to get a big flush in this market to end what is happening right now. So VIX, probably would want to keep an eye on it at least once a day and make sure that you're not, if you're accelerating and breaking out and you're above 38 to 40 level, then you're going to have, that's where I think the real fireworks begin. So fireworks haven't even started yet, folks. You go to the VIX and that's not popping. That would reflect any kind of acceleration, any kind of capitulation. And then you go back to the many instances. 2008 bear market, you got to 95. And then 2020, you got to 84. What's that, an 886? Probably. Let's take a look. Here's the spread. So from there, yeah, almost 886 on the dot. Why wouldn't we get another spike 886 off of that peak? Put you around 77. You're a long way from there. It's going to take more time, probably eat it up this summer. And that would be one of the things that you would want to see. You'd want to see this VIX roll over after a spike to mark the capitulation. If it's not going to do that, it's just going to be more of the same. Let's circle back. NASDAQ, folks, where are we? Dow's down 100. NASDAQ's off 420. And looks like we've got another bearish pattern developing. Oh, no, it just went away. Keep an eye on NASDAQ, how we close tonight, and also keep an eye on the crypto total market cap for the weekend. Because if those continue to break down into new lows day over day, then you know you are in acceleration leg. I think we are. I think we're already there across the board. We're more than halfway down. And the second leg of this stuff always takes less time and is more severe. That's where we need to get to. Again, there's NASDAQ. All right, failing the hop at 11,848. Can you get some kind of bounce here? Otherwise, if you just keep making new lows, you get under 11,000 psychologically. Yeah, forget 10,000. I'm worried about 8,000. I really think you are just a few days, another 2-3 down days away from essentially triggering that whole collapse and go from 10,000 to 8,000. That's what happens when you get into massive liquidation mode, and that's where we are. It does bring opportunities, but at much lower levels. That's what I want everybody thinking. So, again, take a look at what you're doing. Take a look at your assessments. Maybe if you're a hodler, maybe reconsider. Think about trading. Think about utilizing what we do to define more opportunities. Bitcoin, can we bounce off of 19,742? Only if HSI can pop out of the zone. That's for BTC. We need to get that indicator up and out. That's an early indicator, but once that happens, then maybe you could get some kind of counter trend reaction. It's a tough call because this is so oversold, quite deep in fact, where if you go back, we're challenging the prior lower lows all the way a year ago. A lot going on here, folks. I know we hit a lot of big numbers, and it seems like it's a now what moment, where you hit 20K, great. What do? Remain patient. It's probably one of the most difficult things as a trader to do, is to sit on your hands. But at this moment, I think the opportunities that we'll get will be a bit lower, and they'll be to the right of the trend line. Take that for what it is. Really critical, though, an easy technique to everyone can draw trend lines. You get the free version of TradingView and draw the trend line constraints that show us clearly where this is headed, and wait till we're to the right of that. Again, I said this on Tuesday. I'll say it again. You will lose time and money trying to fight that downtrend. So unless something else changes, with crypto, we can get this HSI signal on Bitcoin to pivot out on the daily. It's going to need 2 or 3 more days. That would be the first step of something in this area, but you still have nothing in the area. And my fear is that you languish in this oversold zone, you roll back down, and you stay there, which is a continuation move. Let me see if I have something like that. No. So I'm really skeptical on the fact that this will hold. I'm hoping that something can come together, either oil abates or the energy crisis or the total malaise. We are in the malaise, folks. The malaise is here. I talked about the malaise starting last August, and it's going to continue to get deeper, darker. We're just gotta let this wash out. I'm thinking maybe by the 21st we can get down to certainly under 20,000. Can we get a crash? Can this crash by next Tuesday, or this coming Tuesday, if you will? 5 more days, 6 more days. Keep your eye on Ethereum. Let's circle back where we started, which was Ethereum. Ethereum and any of these others that are going to show you hourly patterns, like where the pattern is I think as important relative to the downtrend. You do another bearish pattern. Maybe you get a type 1, type 2, but again, Ethereum leading the way down 50% in the last week, 10 days. You would hope you get some kind of a bounce here, but under that pattern, really under where we are, I think then starts the move to 600. As crazy as that sounds, I know, but you have to hold here and do it for 30 days. Or do it for 30 bars at a minimum. Like, there's 30 bars right there. That'll put you into tomorrow. But even on the daily time frame with Ethereum, look, the daily HSI still hasn't popped out. So you have to give this another couple of days to see how low it's going to go. Do we do 600 now, or do we nominally test 1,000 and bounce back up and then roll over again? Because that's what it has been doing. I'll keep a close eye on Ethereum now for crypto more than anything else. But it doesn't look good. And I would hope this would rally up maybe 300-400 points and then develop something in another week or two. So critical time, folks. I know it just seems really kind of dire, but we'll get through it. We will get through it. Markets are holding firm. They're down 3-4% across the board. Stocks. And again, come back on Monday. Let's see where we are Monday. So that's what I will do. So thank you for today's session, everybody. Again, get on the website. Go to Harmonic Trader. Your journey begins there. If you do want to follow me on Discord, go there. Or put up the Discord link, please, which is right here, where we've got lots of folks hanging out all the time. And you can get everything that you want in there. Yeah, 1,500 members. Okay, that's a great. I don't need a big community. I just need quality members, which we definitely have. We have super quality members, a lot of active people who know their stuff and demonstrate it every day. So please join. Hang in, folks. Everything's going to be fine. We just got to get through it. Until Monday, have a great weekend and go get them. We'll see you.